This has been one of the wildest years in the stock market. Up big one month, down the next, and even though the S&P is up 17% this year, a lot of investors probably lost money because they timed their buying and selling incorrectly. So today, we're going to look at what Warren Buffett is doing, and more importantly, what he's advising people like you and I to do when the market feels unpredictable. In this video, we're going to help you understand how to approach investing when the market feels uncertain, whether stocks are selling at all-time highs or the market is falling. We're going to do this while using Warren Buffett's guidance and examples. We're going to walk you through the principles that have helped them succeed for decades, the best track record on the longest period of time, and more importantly, how you can apply them to your investing journey in 2026 and beyond. So whether you're just starting or you're trying to make better decisions with your investments after years of investing, this is the kind of clarity and direction every investor needs right now, and they need to remember it for years and years to come. So before we dive deeper, let me ask you this question. When the market gets loud and confusing, who do you trust? For me, it's simple. I go back to the principles of Warren Buffett and Charlie Munger. They're not hype chasers. Buffett has been well known to never chase hype. He's a business owner and his advice works when everyone else is loud and scared. And right now, the news has been very loud. Stocks are near all-time highs. Volatility has picked up quite a bit. AI stocks appear to be in a bubble. And maybe you're wondering if you should sit this one out or jump all the way in. That's exactly why Buffett's voice matters more now than ever. Because in times like this, when things feel uncertain and overpriced, you need to lean on the timeless wisdom, not the trending headlines. Buffett's not guessing what's going to happen next. He's focused on what's always worked in the long run. Now, when that market gets wild, most people feel one of two things: fear or greed. That's why we have the Fear and Greed Index. But Buffett, he stays calm, and he said it best. The recent market swings amount to nothing. That's coming from a guy who's seen every kind of market you can imagine. Huge booms, huge crashes. So, when he tells us not to overreact, you must listen. Buffett warns that investing based on emotions is one of the biggest mistakes people make. I would argue that it's not investing. You panic, which means you probably sell too early, and you get greedy, which means you buy the wrong stocks at the wrong time. Remember, no matter what happens, if you pay less than something's worth, you're probably going to do well. If you pay more than something's worth, you're probably going to struggle in your returns. So, in times like these when headlines are screaming, you got to ignore the noise. Focus on buying strong businesses that you would hold through thick and thin, because that's what real investors do. Now let's look at what Buffett has actually done recently, not just what he says. When prices are high, Buffett doesn't feel pressured to do anything fancy. And that's exactly what we've seen in 2025. He's actually pulled way back in buying. In fact, he even stopped repurchasing shares of his own company, Berkshire Hathaway. Instead, Buffett's sitting on a mountain of cash. Why? Because he's waiting. When stocks are expensive, sometimes the smartest move is no move at all. Yes, Berkshire did buy 17 million shares of Google, but don't miss the big picture. Buffett and Berkshire are still a net seller of stocks this year. He's been trimming back some of his biggest positions like Apple and Bank of America. Bank of America he has held for a very long time. That tells us something really important. Even the best investors know when to hit pause. So, what we can learn from this? Well, when everything feels overvalued, you don't have to chase. Patience is a strategy too, especially when you're following price versus value. But guys, most people feel like sitting on your hands is doing nothing, and therefore that's bad. That is not the case at all. And I will acknowledge Buffett's approach to investing is not something you should mimic in terms of how you buy and sell. His goal is to preserve that wealth. Your goal is to grow your wealth. So, I understand there are differences there, but you still need to look at his actions to realize where we are in the markets and what you should be learning from that. So the question becomes, if Buffett isn't buying M right now, what should I do?